So I think it's really interesting, actually, because what the stock market means to us has changed over the years. I heard Sarah say a minute ago that the stock market is increasingly concentrated, and I think that's true. I think if you look at the signal that you can take from the stock market from a macro perspective, it is clearly weakened. It is much less representative of the economy than it has been. Part of that is, natural. The stock market is a market of stocks rather than a macro asset. It has idiosyncratic stories in it. But part of it is that as it has become increasingly concentrated, it's telling us a story that may not be representative of the economy as a whole. And certainly the impact of the stock market, I think, is to increase dispersion within the economy. Members of the investor class, people who are listening to this program, people who are invested in the stock market, are not experiencing a cost of living crisis, right? The stock market has beaten inflation, has beaten the cost of living by multiples, right? It's everyone else who is suffering through the cost of living crisis. We may not like higher prices, but the stock market is telling us that for the wealthy, there is no cost of living crisis.
3.8% headline CPI year over year. Consensus was 3.7, was 3.3 last month. What do you make of it?
So here's what I think of it. One of my favorite metrics to measure the health of the U.S. consumer is if you multiply the number of people working times the average number of hours that they work every week times average hourly earnings, you get a proxy for the household paycheck. How many people are working? How much are they working? How much are they getting paid? You know what the growth rate of that is for the last 12 months? 3.8%. Exactly the same as the CPI. So that tells you for the last year, in aggregate, the American household is treading water. The rate of gain in their aggregate income is zero. Right now, 2 months ago, before the inflation spike, it was positive 1.3%. They were doing okay. Now we're at zero. And if we go any further down this path where inflation goes up further, which I think is likely, you're going to have to draw down savings, you're going to have to borrow, you're going to have to sell something in order to keep your consumption going. This is, to me, the best metric to track the health of the aggregate U.S. consumer.
So what are you going to be looking for next year? Some folks are saying, you also got to pay attention to what's happening at the PPI because this higher energy costs, it's going to get into the cost of production, and that's another thing that might flow down to the consumer. What are you going to be looking for?
Yeah, look, again, like everyone else, I think we're watching oil prices, right? I mean, oil prices are going to filter through. Gasoline prices are up. I talked about dispersion within the economy. The goods that are true essentials that people at the lower end of the income distribution spend more on are the ones that are going up most. So that 3.8% conceals within it some dispersion because not everyone faces the same inflation. The wealthy have lower inflation because a lower percentage of what they consume is food and energy. So,
Can you put a statistic on that?
It depends on how you want to break down the quintiles, but I think it's entirely reasonable to think that the lower income consumer is facing inflation that is not 3.8%, but is closer to 5, 6, 7%.
Okay. Because
what they're buying are the goods that have gone up more.
Others have come in and said the same thing, but nobody said it like Eric Winograd. I mean, what is the political history that you see into an election of an inflation rate that is, let's be charitable and say, about 4.5%? For politicians, there's no other issue, right?
That tends to be correct, right? When prices are going up, go back to the Bill Clinton years for those old enough to remember, right? Well, what did he run? It's the economy, stupid. And the way that people perceive the economy is what they have to pay. It is going to dominate the electoral cycle. How that plays out remains to be seen, but I would expect, and I've spent large parts of my career studying emerging markets, I would expect to see some sort of fiscal support coming from the government, whether that is, in extreme cases, you get price controls. President Trump was talking about repealing the federal gas tax. You try to do something here, and the net impact is to increase the deficit again.
Can we do an 8-hour show today, Paul?
Yeah,
I got a ton. Let me sneak this in, and Paul's going to jump on me. Here, Eric Winograd, I mean, as simple as I can, the president's talking about doing something with beef, importing beef or whatever to bring the price down. If tariffs failed and the big unexpected surprise into the election, a la McKinley, 1901, I think it was, weeks before he was assassinated, the basic idea that the president's going to back off on tariffs. Is that something we should think about?
I doubt it, but that's a political read, not an economic one. And the reason I say that is because this president does not tend to publicly back down from very much of anything, right? His general way of doing business is to double down, not to back down. I think it would be difficult for him to admit that his signature policy is a failure. That said, he does seem to be comfortable carving out exceptions and working other ways around it. I would suggest that beef maybe isn't the first place you should go, that's not maybe the key aspect for most households. But again, that sort of policy is very much in play. I think it is more likely that he'll try to do something around gas prices, or to go back to an idea that they talked about last year, which were tariff dividend checks, right? If you don't know what to cut the price on, you just send people money. So I don't have a view on which of those come into play, but a big part of our view for this year has been that some part of them will.
I mean, Paul, I'm sorry, 3.8 is a tip point for me mentally.
Yeah, I mean, if you get a four handle, that's going to be also for a lot of people. How about on the other side of the Fed's mandate here, the labor market? What's your takeaway these days?
So the good news is that the labor market appears to have stabilized and even picked up a little bit early this year. It appears from the data that there's been a slowdown in the momentum around deportations, and the labor force has grown a little bit. At least the foreign-born labor force has grown. Hiring has picked up, so we're seeing both labor demand and supply go up. 4.3% for unemployment is an outcome that I think that the Fed would be happy with. There's nothing in the labor market data that suggests they need to do anything on rates in either direction. If you go back to last year, with the labor market weakening as it appeared to be, there was a good case to be made that you should cut rates. The Fed in the end didn't do that, and they look to have been correct in that because the labor market has stabilized.
I wanted to get Jonathan Spence in here on the trip to China. Unfortunately, he's died. That's a joke, folks. Jonathan Spence is definitive across the 20th century on China. So instead, we have Eric Winograd here, who will do a good job. You are truly expert on the Pacific Rim. What is the president when he lands, gets in the car? I've literally been in the room in Beijing where Kissinger and Nixon met the prime minister. I remember the hotel, red leather chairs. When he sits in that red leather chair, what's it going to be like?
So I was actually in Asia just a couple of weeks ago, and I think that the perception there is, that the U.S. is in a lot of respects shooting itself in the foot, and that as a result of the way things are playing out here, the policy choices that we are making, we are weakening our own. The fabric of our society is weakening. Our economy is more vulnerable. Inflation is rising. We're worried about the labor market at the same time. I think that the Chinese are probably reasonably content with that state of affairs and are just trying to stay out of the way. The Chinese government, Premier Xi, have been relatively quiet publicly about everything that's going on. I expect them to sort of sit back, and there are certainly issues where they will press President Trump. They are not happy that the president is proposing arms sales to Taiwan, which China views as a core interest. So there are points of contention, but I think that the premier is probably relatively content to allow things to play out and to try not to make big waves or headlines.